Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So yesterday in Forex report we have taken a look in depth on the economical situation that have changed. Last week we have the new data from the employment and the non-farm payrolls release, also some update on the real estate market, and actually everything's going with our long-term view as we suggested. That's while initially we've got the negative results on the faster indicators such as inflation, retail sales, consumption, savings, and so on. But when some time has passed, we should get the spreading of the negative effect on the majority of the economical spheres in all spheres of the economy. So now it's real estate and actually start rising of the unemployment. Actually, we even last month already have waited for that, and on the previous non-farm payrolls release we said that it seems that unemployment should start rising, but last time it hasn't happened. It just has happened now in July, and this process definitely will keep going. So another conclusion that we could make is that Fed stands totally focused on the inflation, ignoring some negative moments in other statistics just because they are not yet the vital. They haven't reached yet the edge. And that led Fed to be focused on inflation and use it as a major, object to struggle with. And this sentiment is also, moving to the markets and investors that also treat it as a major problem, and join with this hawkish statement from the Fed aiming on the rising rates and so on. And that makes a negative impact on the markets, including the gold. In today's update, we also have taken a look at some specific moments that we see on the gold, and particularly have discussed the changes on the bond markets and changing on the recent interest rates, and why investors currently talk, and actually in media you could read a lot of articles that starting showing that real interest rates turn positive. That should be the bad event for the gold, and this is the topic that we need to consider, and we talked about this in today's report, just because the situation stands not so as it's shown in the media, and especially with the treating of the real interest rates. What is real interest rates now, how they should calculate it, and what's real meaning of these rates. They are not positive actually. And what you see in official statistics in the Treasury inflation protective notes, this is overvalued numbers. The real interest rates right now not positive. And second moment, we have taken a look at some political issues that we see right now is rising in the United States and might become really big driving factor for coming few months. We see that these processes are rising, and we do not exclude the possible social boom that might happen around the November elections and their results. And not only we see this, you could see the recent the cover of The Economist that is called as the Disunited States of America. You could see the post of the France embassy with the just single word is called revolution. And this is really the important moment that we see currently, and that could make the significant impact on the performance of the gold market as well. Whatever performance will be after November, it will be positive for the gold anyway. But if some political tension starts, that will be positive for the gold. That means that it could turn north earlier than in a scenario where everything will be relatively quiet. So you could read if you're interested in that. Speaking on technical point, take a look at, based on recent data that we've got and non-farm payrolls, you can see the minor bounce on the gold. Well, knowing the really trickiness of the gold markets very cunning, we treat this pullback as a trap. It's because in 99% gold never leaves behind lows without washing it, and the stops that have been placed below it. I wouldn't like to even talk about the uncompleted target, which is also, well, hardly possible that gold will just ignore it and turns up. It means that sooner rather than later, maybe next week, which we hope about actually, that gold should complete and wash out these lows. As monthly charts suggest, and we talked about on Friday, that most probable destination point is in area around 1670, 1672, whereas the major monthly OP stands. This is the possible depth of the drop below these lows that market could try to complete, 1670, around this level. So once it will be completed, indeed some more significant pullback could start. It's just because major monthly target will be reached, and in general 1660, 1680 is a very strong support area. And we not expect that gold could break it on the background on the fundamental news and the Fed policy that we have. Because, well, actually 4%, 4.25% possible rate change from the Fed, it's already well known. And, well, it brings no surprise. Yes, it will make negative impact on gold performance, but it is not sufficient just to crush the gold market. So that's why we do not expect a big drop and collapse on the gold market anytime soon. So that being said, we are aiming on the completion of this weekly grabber pattern, touching with the 1685 and potential move to the 1672 area. So on the follow time frame chart, we have ready to use setup for taking the short position, or at least consider taking the short, because take a look here, the market hasn't completed the OP target as well. So we have here this ABCD pattern. This OP coincides with the daily COP target, and take a look, we have ready to use brand body sell pattern. We have thrusting action, 1, 2, 3 closes, 4 closes above the 3x3, and market stands at the confluence resistance. So it means that it's ready to use brand body sell around the confluence with the target around at least 1685, but potentially 1672. That's what we intend to consider on the gold market in the coming week.